Hello, this is Paula and I'm here with the weekly blockchain brief. Today we're going to be focusing on the latest developments around DCG and Genesis. We're going to go quickly through a bit of macro data and what it would mean for the crypto sector. And at the end, as usual, we're going to look at the most interesting deals that happened in the VC sector during the last week. So if that sounds interesting to you, please tune in. Let's go to the news section. As promised, we're going to be starting with Genesis and DCG, which we already discussed during the last blockchain brief. So if you didn't watch that, just in summary, Genesis was on the spot for hiring restructuring lawyers, despite tweeting that they won't file imminently for bankruptcy. This brought us to review their balance sheets of both Genesis and their parent company DCG, to discover that DCG has $2 billion in liabilities, and the interesting part, out of which $1.7 billion is directly owed to Genesis. On the other hand, the crypto exchange Gemini is allegedly owed $900 million by Genesis and consequently DCG. Gemini has already formed a creditors committee to recoup the funds. CoinDesk revealed that there is another group represented by lawyers claiming another $900 million, bringing the total liability of Genesis to $1.8 billion. They also reported that there is a third ad hoc group being represented by Kirkland and Ellis, which would probably bring the amount further up from the 1.8 billion. And next we continue with another exploit that happened. This time it's ANKR protocol. Attackers stole $15 million and left a scattering hole across the BNB chain protocol. The hacker exploited the bug in ANKR protocol's ABNBC code to mint trillions of ABNBC tokens. By exploiting the unlimited minting bug, the hacker swapped 6 quadrillion tokens for just 10 BNB, and this way he dropped the price of ABNBC by more than 50%. Here, Helio is also affected. So Helio suffered since the hacker deposited ABNBC on Helio as collateral to borrow 16 million HEI tokens, which he sold for approximately 15.5 million BUSD on 1 inch. The ANKR team confirmed that the hacker only made off around $5 million from their protocol and is going to work closely with Helio to help manage their situation. And Helio also confirmed that they are working with ANKR to help repeg their token and repay the debt from the event. ANKR will also enter a bilateral agreement with Helio to buy an excess of the HEI tokens and coordinate the recovery. And while some suffer in this market, some are very opportunistic, like Galaxy Digital. Galaxy Digital is definitely taking advantage of the opportunities in bear market. One of the latest is the acquisition of JK8, which is a self-custody platform which was previously owned by Celsius. As other of Celsius holdings, JK8 was sold at an auction that Galaxy Digital won, and while the price is not disclosed, it is known to be way lower than what Celsius acquired JK8 for back in November 2021. The amount at the time was $115 million. Let's move to macro. Payrolls data came out last week. On Friday, payrolls grew by 263K in November, well ahead of the 200K Dow Jones estimate. This shows that all the Fed efforts so far had done very little to slow down the economy, and this happens right after we got signals from Fed that they're ready to slow down the hikes. So the timing of such big gap in the data is worrying, because the new jobs added mean that inflation will continue accelerating even with the current level of interest rates. Jobs data came highly above the estimates, so let's look at the numbers one by one. Wages rose 0.6% on the month, which is double the estimate. The 12-month average hourly earnings accelerated 5.1% when we had a forecast of 4.6%. And if we're trying to predict what Fed will do next, it might be helpful to look in depth in the last speech that Powell gave. He mentioned that the main criteria for the intensity of the interest rate hikes will be supply chain issues, housing growth, and labor costs, particularly the wages. So we can only wait for new guidance from the Feds and their further policy just a week after we were getting the signals for a possible decrease in the increment of hikes. The risk indicator VIX is already up on the news, and we'll see how the equity markets will react during the week, and would the correlation with BTC hold to see a parallel move in the crypto space. Let's move to the VC section. Today I picked up only one deal that I think is worth discussing, and it is Fleek. While that we're observing a massive slowdown in the VC funding, there are still large deals happening, which is an important indicator of the space. In this line of thoughts, we will talk about Fleek today, that raised a $25 million round in Series A. The round was led by Polychain Capital, and participation was seen by Coinbase Ventures, Digital Currency Group, Protocol Labs, and a few other VCs. As I previously said, we're still seeing DCG actively deploying capital, so I would be interested to see their balance sheet or more to know when those investments were done, because as I mentioned before, a round might take up to 6 months or even more to close, so we cannot know if this is something that they deployed a week ago or 6 months ago. Anyhow, let's talk about Fleek. Fleek is a Web3 developer and is aiming to build an interface and protocol layer to make the base layer of Web3 services like storage, hosting, and billing more accessible, or more of being Amazon Web Services for the Web3. Fleek has great traction. Currently, it hosts around 50,000 apps on its platform, and this fresh capital would be used to build out the Fleek network and platform while bringing on additional talent and growing their community. That was all for today. Thank you so much for watching and wishing you a great week ahead.